Welcome back to Current Affairs Settler series. I'm Guna Mathivanan from Officers IAS Academy. In this video, we will be discussing the difference between VAT and GST. Friends, in the previous video, I discussed the constitutional background of GST and I also explained what are those taxes subsumed under GST. I'm coming up with a series of GST basic topics. The next 4-5 videos will be pertaining to GST for giving you a holistic clarity on GST. So today we will discuss the difference between VAT and GST. But before that, we will try to understand what is sales tax. What is sales tax? So friends, sales tax is a tax which is imposed on sale of a good. When a good is sold in the market, sales tax will be imposed. So it is a tax imposed on the sale of a good. So let's assume this wheat is worth 40 rupees. Assume wheat is worth 40 rupees. When this wheat is sold in the market, sales tax will be added. I'm assuming sales tax is 10%. So 10% of tax will be added on this wheat of 40 rupees. So 10% on 40 is 4 rupees. So that becomes 44. Now this 44 rupees worth of wheat is purchased by a bakery to produce bread. And the bakery produced 100 rupees worth of bread. When this 100 rupees worth of bread is sold in the market, 10% of sales tax has to be imposed. So 10% on 100, that is 10 rupees. So the bread becomes 110 rupees. So this 110 rupees worth of bread will be purchased by the end consumer. Friends, in the first stage, we are not finding any issue. But look at the second stage. Look at the second stage. This 10% tax, when it is imposed on this entire 100, there comes the problem. So what is this 100 rupees? This 100 rupees is nothing but, it is nothing but 40 rupees of wheat plus 4 rupees of tax. 40 rupees of wheat for which 4 rupees of tax is added, plus you will have 56 rupees of value addition. So if you break this 100 rupees, which includes 40 rupees worth of wheat, for which 4 rupees of tax is already paid, plus 56 rupees of value addition made by the bakery. Now by imposing 10% tax on this entire 100, we are imposing 10% tax on the part for which tax is already paid. Look at this part. Look at this, focus on this part. For 40 rupees worth of wheat, 10% tax of 4 rupees has been already paid. When you impose 10% on this entire 100, then that will lead to double taxation. Wheat is taxed once a year. Wheat is taxed once a year. And once again, the same wheat will be taxed again if we are putting 10% tax on that entire 100. Right? If a supply chain has more number of value additions, here I have taken a very simple supply chain, wheat, bread, that's all. But if you complicate the supply chain, wheat, bread, now bread is getting converted into sandwich or some other bigger supply chain, then more double taxations will happen and you will be witnessing cascading of taxes. You will be witnessing cascading of taxes. So this cascading of taxes, that is imposing tax on the same part again and again and again, that will make the product more costlier. The consumer will end up paying more amount of money. So this is the drawback which we see in sales tax regime. This is the drawback which we notice in sales tax regime. Right? So to address this problem, VAT replaced sales tax. The sales tax was replaced by VAT. Now what is this VAT? As the name says, it refers to value added tax. As the name says, it is value added tax. So sales tax was imposed on this entire 40. Sales tax was imposed on this entire 100. But value added tax will be imposed only on the value addition part of every stage. It will not be imposed on the entire value. VAT will be imposed only on the value addition part. So if you take stage 1, the farmer has added the entire value and produced wheat. It is the complete contribution of the farmer. So 10% tax is imposed on the entire 40. So first stage there is no problem. Look at second stage. In the sales tax regime, this 10% tax was imposed on the entire 100. The 10% tax was imposed on that entire 100. But in value added tax regime, we will not impose 10% on the entire 100. Rather, we will impose 10% only on the value added stage, only on the value added part. So 10% will be imposed only on that value added part. So now what happens? What happens when you impose only on that value added part? So 100 rupees worth bread plus 10% of tax, and this 10% of tax is imposed only on this value addition. So 10% on this 56 rupees is going to be 5.6. So the bread price will come down to 105.6. We will round it off. The bread price falls to 106. The bread price was 110. In the sales tax regime, the bread price was 110. But in VAT regime, this bread price came down to 106 rupees. So VAT replaced sales tax. VAT replaced sales tax. So VAT is a reform which was introduced to avoid the cascading of taxes. It is appropriate to tax only on the value addition made in every stage. Clear? So this is the difference between sales tax and VAT. Sir, what is the difference between VAT and GST? What is the difference between VAT and GST? In principle, VAT and GST is one and the same. In principle, VAT and GST is completely one and the same. Principle wise, there is no change. GST is also a value added tax. Then what is the difference between VAT and GST? What is the difference between VAT and GST? Let's try to understand. This VAT was imposed only on goods. VAT was imposed only on goods, but GST, as the name says, it was imposed on both goods as well as services. This VAT replaced sales tax. This VAT replaced sales tax, but GST replaced most of the indirect taxes. GST, it replaced VAT and most of the indirect taxes. Not just VAT, it replaced most of the indirect taxes. This VAT rate was different. The VAT tax rate was different in different states. It was different in different states. In Tamil Nadu, VAT will be different. In Karnataka, VAT will be different. In Uttar Pradesh, VAT will be different. But if you take GST, you are going to have one tax rate throughout the nation, right? So you'll have only one common tax rate. GST will have one common tax rate throughout the nation. So in principle, VAT and GST is one and the same, right? But however, in GST, there will be a slight difference in terms of applying the tax on the value added part. So we will try to understand how GST is practically collected. That we will try to understand, right? How GST is being practically collected. So in GST, how it works? This 40 rupees, same example we will take. 40 rupees worth of wheat. 40 rupees worth of wheat, for which, let's say, tax is 10%. So 10% of tax is imposed. So 10% on 40, that is 4 rupees. So it becomes 44. In this stage, there is no problem. When it comes to bread, 100 rupees. So this bread is going to be 100 rupees. The bakery purchases 44 rupees worth of wheat and they produce 100 rupees worth of bread. So here, We all know that 100 rupees is nothing but 40 rupees of wheat plus 4 rupees of value addition plus 56, for 40 rupees of wheat, 4 rupees of tax and 56 rupees of value addition. We all know that, we saw in the previous example itself. In VAT, we are going to impose 10% tax not on this value added part. We will impose this 10% tax on the entire 100 only. In GST, like sales tax, in GST, we will be imposing this 10% tax on this entire 100 only. That is, we will impose this 10% tax on this entire 100. Now you might ask, sir, will it not lead to double taxation? Will it not lead to double taxation? Because for wheat, we have already paid tax. For wheat, we have already paid tax. That's okay. Government says, like sales tax regime only, you pay 10% tax on this entire 100. So 10% tax on this entire 40. First stage, no problem. Second stage, 10% tax on this entire 100. Now, in GST, what government says? When a product is taxed twice, or when a product is taxed more than once, that would be correct. When a product is taxed more than once, then the additional taxes collected will be refunded. Government says when a product is taxed more than once, then the additional taxes collected will be refunded, because it is not practical for the government to find out what is the exact value addition made at every stage and put a tax only on that value addition part. It is not practical. It will be very difficult. So what government says, everyone, GST payers, you pay that tax amount on that entire 100, on that entire 40. Let there be cascading of taxes. You please pay on that entire amount. Right? And government, when they find there is cascading of taxes, then they will order refund. They will order tax refund. So in this stage, wheat is taxed once here. In this example, wheat is taxed once here. And by imposing 10% tax on this entire 100 rupees, wheat is taxed twice here. Wheat is taxed once here, wheat is taxed twice here. So a product is taxed more than once. So what government says? Government asks us to pay the entire tax. And what government will do, when they find cascading of taxes, they will retain the output tax. The tax paid on the output will be retained. The tax paid on the input, that will be refunded back. The tax paid on the input, that will be refunded back. The tax paid on the output will be retained. The tax paid on the input will be refunded. So, in this example, wheat is taxed twice. Here, stage 1. Here, stage 2. The tax imposed on the stage 2, government will retain. The tax imposed on the stage 1, government will refund. That is, the input taxes will be refunded. And that refund is called as input tax credit. Since the input taxes are refunded, it is called as input tax credit. And this refund happens with the help of Goods and Services Tax Network, GSTN, all powerful system, a computer network, all powerful software, which will be used for bringing this refunds. Don't think how this refund will happen, right? Or what is the process, how government is going to do that. That is not important from our exam point of view. Just know that this refunds will be given, that input taxes will be refunded through a network called as GSTN. Now you may get a doubt, sir, where does this refund goes? Who will get this refund? You know what? The refund will go to this bakery. Because it is the bakery which has paid this 10% tax here, right? So the refund will go to the bakery. Now you will be curious. You'll be having a doubt. Sir, it is the consumer who is paying all the taxes. So the refund should go to the consumer, right? But however, the refund goes to the bakery. The refund goes to the bakery because it is the bakery which has paid the 10% tax to the when they purchase wheat. So in this example, the refund will go to the bakery. Remember, the refund, that is the input tax credit, that will be going to the bakery. But actually speaking, the refund should go to the consumer. The refund should go to the consumer, but the refund goes to the bakery. Right? That is not correct. The refund should go to the consumer because he is paying the all taxes at the end. So why refund is given to the bakery? Do you think it is practical to find out every consumer and give refunds? Because the consumer is going to pay the final tax. Do you think it is practical to pay or to find out all the consumer and order refund? It is not practical. So what government does? They will give this refund to bakery. So here input tax is, what is the tax paid in this stage? 10% on this 40, that is 4 rupees. That is the input tax, right? So that input tax will be refunded to bakery. So bakery will be getting 4 rupees of refund. What government says? This refund given to the bakery is not to benefit bakery. That is actually to benefit the consumer. So government expectation is this 4 rupees refund should be passed on to the consumer. That should be passed to the consumer. This 4 rupees of refund should be passed to the consumer. So how it will be passed, sir? So when what is the price of the bread? The bakery was selling the bread for 110 rupees. We know the bakery was selling the bread for 110 rupees. 10% on this 100 is going to be 110. So the bakery was selling it for 110. But now 4 rupees of refund will be given. So next time, bakery after getting the refund, next time when they make the sale, they should not sell for 110. Rather, they have to sell it for 106 rupees. They have to reduce the price. When they reduce the price, consumer gets benefited. Right? First time a consumer would have purchased, don't think how he will be benefited. Idea is that refund will be given to the bakery so that from the next time, the bakery will be reducing the price from 110 to 106 rupees. So when it becomes 106, that is going to be the benefit for the consumer because he was paying 110 earlier, now he pays 106. Now I understand. You might ask a question, sir, what if suppose if the bakery is not reducing? If they are not reducing and they still sell it for 110 only, because refund goes to the bakery. What if the bakery is not reducing the price? What if the bakery is hijacking all the benefits? That is called as profiteering. If the bakery is not passing on the benefit, that is called as profiteering. So government, to avoid these kind of profiteering, they have set up a national level authority called as National Anti-Profiteering Authority. A national level authority was set up for what? To check whether these suppliers, these firms are involving in profiteering or not. A national level authority was set up, that is called as National Anti-Profiteering Authority. In 2017, it was set up. Right? So it was set up only for 2 years. 2017 till 2019. One more extension was given till 21. Right? Then after that, government scrapped NAPA. Now we do not have NAPA. The role of this National Anti-Profiteering Authority will be done by Competition Commission of India. So now the role of Anti-Profiteering Authority will be done by Competition Commission of India. Right? I hope you got some clarity on how this GST works. What is the difference between sales tax and VAT? What is the difference between VAT and GST? How GST is practically being applied? What is this refund? GST refund, we all say. What is a GST refund? There is nothing but input tax credit. Whether the refund will go to the consumer or to the firms, GST payers that we have discussed, it will not go to the consumer. Expectation is the business firms who get the refunds, they should pass on the benefit to the consumer. If they are not passing it on, that is called as profiteering. To address this profiteering issue, a national level authority was set up called as NAPA. But now there is no more NAPA. The Competition Commission of India will be taking care of these kind of profiteering activities. If you come across such profiteering, then you can raise complaint to this Competition Commission of India and they will take action. Right? I hope the video was useful. So based on our discussion, I have given a multiple choice question. So find out the right answer and give it in the comment section. Also tell your opinion. Do you think that really the firms are passing on the benefit to the consumers? Whether you have encountered such situations where you are not getting that benefits. So you can also give your opinion on the difference between VAT, GST, sales tax in the comment section. I hope the video was useful. So in the next video, I'll be discussing another important GST basic topic. Till then, bye, take care.